Hi everyone, Drini here, and welcome to my channel. So we're going to do a quick market update today, because if you look at your portfolio now, unfortunately, things appear to be crashing down. So let's dive into the charts to see what we can see, okay? So if you wanted to know like the macro level view of Bitcoin, I already covered that in my last video. In today's video, I do want to focus on more shorter time frames so that we can see the specific price action that will be going on over the short term so that we know how to chart our way forward. So I'm looking at Bitcoin on a daily time frame right here. And if you notice, after this capitulation right here that sent us back to $33,000 or $32,000, we did pretty much have a relief rally to the upside. The promising part about this is we formed actually a cup and a handle right here, but we were not able to break this particular neckline right here, ranging from $44,000-ish. So unfortunately, we got rejected from the neckline. And now what you have is we are playing out a double bottom structure right here. So this particular neckline of around $41,000, once we broke through this particular neckline, we do have a technical target. The technical target is the height of this double bottom structure right here. When we overlay this to where the breakout happened, our technical target for this double bottom is at $38,000. So right now we're on our way there. A potential play here would be a further capitulation to meet that particular technical target right here. Some relief, because once this is hit, so there will be some short-term relief rally, but I am expecting that we will be rejected here, either on the daily 21 EMA right here, or this particular neckline right here, or the 55 EMA right here. Why am I expecting that? That is because it is much easier to see this on a weekly time frame. Ever since the June capitulation right here, we actually have undergone a 5-wave Elliott wave structure. So this is your wave 1, this is your wave 2, this is your wave 3, this is your wave 4, and this is your wave 5. Right now, where are we? We are in the middle of an A wave. And this is the B wave high, and we got rejected here. And now what are we left with? We are left with a C wave correction to the downside. This is why I sold all of my layer 1 positions, because now that we have done the relief rally right here, there's high likelihood that we will be going back to the levels we were back in June to August. So that's why I had to take profits here, and currently I am sitting in a nice cash position waiting for further downside. So you may be wondering, where could we potentially go from here? Timing the C wave is impossible because, of course, if we know how to time bottoms, we will all be billionaires by now. If somebody would have figured it out already, that person would pretty much be richer than all of us combined. But one thing that we can do, we can use certain tools to sort of figure out where could we potentially go. We can use a reverse Fibonacci to try to see where we're gonna go. If you map the Fibonacci where the break in structure, so this particular candle where we finally broke through the EMAs right here, if this is your 1 and this is your 0, and you draw a Fibonacci like this, typically the destination down tends to be the 1618. The 1618 currently is at $28,956. So let me just mark it bigger right here. And if you notice, the capitulation happened when we finally broke through this 40,000 range right here. Once 40,000 was broken and we weren't able to catch back up, the reason for this deeper capitulation right here is because from the 1 to the 1.272 of around $34,888, there's a giant chasm right here. That is why when things fall from certain Fibonacci levels, the candles tend to be very big. That is because, from a Fibonacci standpoint, there are chasms that are wider at certain intervals as compared, for example, to the 618 to the 786, which is this. Could we go deeper than the 1618 eventually? Of course we can, because it really depends on market sentiments, not just with crypto, but with global assets as well, etc. So when we look at the previous cycle, if we do the same exercise that we did just now, where the break in structure, like this particular candle right here, this is your 1, and the previous all-time high right here would be your 0, and we draw the same Fibonacci structures, as you can see, where did we eventually end up? We ended up on the 1618 right here as the bottom, which was around $3,170 during that time. So it remains to be seen whether we're going to go to the $28,000 right here. Highly likely though, if history is any indication. So if you've been wanting to really come into this space, do watch out for these particular levels right here. Because once we start creeping into these Fibonacci levels, then expect that the 1618 will be met. If we have further capitulation, then we will continue to monitor the Fibonacci levels accordingly. What this means though for our gaming cryptos, well, we are pretty much wrecked right here. So over the past coming weeks, we will once again revisit all of our gaming cryptos just to see where we are and most likely revise our risk thresholds downwards. If you like that video, hit like and subscribe, hit the notification bell. Also, let me know what you think in the comments. Do you want me to make a video about your favorite gaming crypto? Be a Patreon subscriber so you can request for it. Being a Patreon subscriber helps keep the channel sponsor, shill, and Moonboy free. Take care everyone. Bye-bye.